going to continue the conversation on technology and real estate, but from a little bit different perspective now. We've heard from a range of disciplines and points of view so far. We're now going to turn to one of the world's major global investors in real estate, GIC, where Goh Kok Huat serves currently as the Chief Operating Officer. I thought maybe we'd start, because not everyone in the audience might be familiar with the activities and scope of GIC, but perhaps give us an overview of the organization, if we could.
Thanks very much, Patrick. Let me first say that it's a great pleasure to be here this morning, and to be among friends from the industry is a real treat for me, now that I'm no longer actively looking after our real estate investment. Most of you will know that GIC is Singapore's sovereign wealth fund. We manage and invest the reserves of the Singapore people. We are a global investor. We invest in all the different asset classes, and real estate is one of them. It has an allocation of 9 to 13%. And specifically in the real estate area, we invest broadly across the globe. Today, about 50% or so of our investments are in Asia, and then the rest of the 50% split quite equally between Europe and the Americas. We invest across the 4 quadrants of real estate, directly in equities, whether through joint ventures or direct wholly owned assets on our own, or through funds indirectly. And then we also invest in REITs, which is the listed equity space, and we also has a book on the debt side of the balance sheet in both the private real estate debt as well as listed real estate debt. We manage all of these investments in, say, about 300 countries with just about 150 people. So in our business in real estate, for example, it's impossible to do what we do without the partners that we have probably scattered around this room. So we are extremely appreciative of the partnership that we have with many of you.
Thank you. Now, you alluded a moment ago to the fact that you're no longer looking after the real estate portfolio of GIC.
Yes.
Tell us a little bit about that professional transition and the scope of your activities now.
Yes. So I'll just say that I miss real estate, right? Mm-hmm. And sitting behind just now listening to Marilyn talk about Denver Union Station, I think, make me miss real estate even more. And listening to Tony talk about Paya Lebar and how you energize space, it's really something that's close to my heart. Or for that matter, William from Microsoft talking about open space and how the corner office is no longer something that is that's going to be a dinosaur very soon. In GIC, we did the same thing. We moved from closed offices to open office a while back, after I've seen some of our Australian partner space. So I do miss real estate. But thankfully, I'm still sitting in the real estate investment committee for a while more, so I still get to see some of the transaction, which is great.
Thank you. So we're going to spend time on 3 topics, all related to the impact of technology on an organization. First, on the organization itself and on the way you recruit and identify talent and manage people in the organization, and manage information flows in the organization. Talk a little bit about investment strategy, how technology is affecting GIC's real estate investment strategy, and then a little bit on the management of real estate assets themselves, the notion of how do we create durable value in an age of rapid change and adaptation, picking up on some of the themes we heard a few minutes ago. So those are our broad topics here in the next 20-25 minutes. So let me start, not with Mad Max or Star Trek, even though we may come back to that, but more on kind of offense versus defense. You know, how do you, as a large organization with very widely distributed investments and a long-term time frame, how do you think about technology sort of generally? You know, what's the organization's strategic approach toward the notion of technology and rapid change?
That's a great question. As you mentioned, our time horizon is long term, and as we think about it, for the longest time, I think most of us think about technology as having the capability to disrupt. But I think equally important is the notion that technology has the capability to enable and advance, to help us enable and advance things in ways that are dramatically different from how it is done today. And so, therefore, if you think about these two dimensions, any organization, and including GIC, it is vital to think about how you can harness the power of technology for the long term, both in terms of enabling the organization in moving forward, as well as to prevent the organization from dying a sudden death, right? And so as we think about it, the framework that we have internally essentially says, hey, you've got to be out there spotting winners. And I think that's what most of us do in the work that we do every day, right? For those of you who are asset managers here, one thing is to figure out which are the assets that will win in the technological age. But equally important when we try to spot winners out there, we must not forget that we have a large portfolio of assets that today sits within the book that we manage. And for those assets in the portfolio, the natural question that we all need to ask ourselves is, will these assets become less relevant? And in the previous session, you have heard about how certain spaces may no longer be as relevant. And the question then is, from a defensive point of view, what do you do to actively manage those assets, upgrade those assets, or in the extreme case, to dispose of those assets? In our own framework, that's sort of, we think of it as offense, defense. Now, there's a third component that's equally important, and that is excellence. And that's why we call the framework ODE, offense, defense, excellence, right? And that's about how can you harness technology to make what we are doing even better, more efficient, such that we become the most efficient organization, even from an investing process point of view. So that's how we think about it.
And how does that translate to the people side of the business? How do you organize the business? I mean, you don't have it's not like football. You know, you send out your offense and then you send out your defense. You've obviously got a more integrated approach to this kind of thinking.
Yeah.
But are you finding that that there's a new way of managing people as well?
Yes, actually, that's a great question. Increasingly, what we have found is, with the advent of data, it is beginning to permeate almost all aspects of the work we do. As a result, the question really is, today, can we all be involved, say, in the business of investing without a basic knowledge of how data works? Likewise, if you think in traditional terms about what a technologist does, today things are so integrated that it is hard to imagine a technology person without a basic knowledge of how the business works. We first picked up this notion when we visited with quant managers who are really in the forefront of integrating technology with their business. And in those firms today, you find that technologists very often sit side by side with the investing people. Not only do they sit side by side,
Literally side by side.
literally side by side, the most valuable people are very often the technologists with a working idea of how the investing business works, and the most valuable investing folks are the people who have a basic knowledge of how data works. And so as in GIC, as we see into the future, we think that it is extremely important that we begin to develop a new generation of investing people who are data capable. And we think about developing a new generation of technologists who are investing knowledgeable. So that's how we think about things. And I think in the world of the future, those two worlds are going to merge.
And have you actually designed your management systems, your compensation systems, to facilitate that kind of fluidity between the investment side and the technology side?
Um, Now, I would say that these are the kind of things that are now being experimented in most organizations. We are beginning to think about things in more fluid terms. And indeed, if you think about it over time, really, as one thinks about compensation and as one thinks about career mobility, and as one thinks about deployability of people, one needs to be a lot more fluid. A little while ago, when I was visiting with venture capitalists as well as startup companies in the Valley, they told me that the most sought after people now, particularly in the investing world, are investing people who has a deep knowledge of technology. And likewise, in the technology world, those people with the knowledge of the business are the most sought after, and they are probably the highest paid people in the Valley. So you're right, eventually it will have to flow into compensation. Right now, that group of people is extremely scarce. And if you can find one of them, you should probably grab them.
The unicorns, right?
Yep.
Yeah.
And if you can't, you've got to create that base over time.
Now, GIC is investing in real estate. You're obviously also investing in technology companies. How has that provided a synergy? In particularly, I'm interested in the impact on your real estate investment strategy. How has your exposure to technology companies, your direct investment in technologies, translated to how you perceive opportunities on the real estate side?
Yep. So this is one thing that we realized, right? In most organizations, as you organize yourself into specialist groups. So the technology people are investing in technology, the real estate people are investing in real estate, and very often it's hard to make people share what they see in the marketplace. And we find that this is key. While we think about picking winners, while we think about what do we need to do defensively about companies that are going to be disrupted, and while we think about using technology to enable ourselves, we realize that the trick really is to make sure that the three different bits talk. And if they don't talk, information don't flow. If information don't flow, you end up optimizing at the respective bits rather than in the sum of the parts. And so today we have put in place processes, put in place the ability for people to talk. And part of that, I want to come back to what William from Microsoft said earlier. We've got to figure out, right, will that corner office allow conversation to flow as freely? Or will the design of the space, and this comes back to design of space, as well as how real estate and physical spaces impact human behavior. And this is probably one of the things that in the real estate space is going to be extremely exciting.
Right. Now, you work with a global network of partners, developer partners, investment partners, so forth. How fluent are you seeing your community of partners on these issues? Are you way out in the forefront, or are you seeing some of your partners in a leadership position?
I think that as an industry, we could probably, and this is including GIC, we could probably spend more time thinking about the impact of technology on our business. In part because I think that in most of our businesses, in most of our investment, because of leases that are long dated and that has a tail, that threat or that exploration doesn't seem so compelling at the moment. But my sense is that technology is moving at a much more rapid pace now, particularly with this round of innovation. The notion of machine learning, machines writing algorithms rather than humans writing algorithms, is going to fundamentally change the landscape. And that's why I think that if, as collectively as an industry, we should really pay much more attention to technology.
And how applicable, obviously, we've seen the rise of the quants in terms of other sectors and investment, driving investment strategies. How is real estate different? Because it's a tangible physical asset, it exists in space and time in a competitive marketplace. How applicable, ultimately, will algorithm-based investing be to real estate?
This is personally my view, right? I would argue that it is no different. Now, if you think about this round of disruption that we have seen, what is underlying all the disruptions that we see? I will argue three things. One, latency. Two, efficiency or inefficiency. And three, supernormal profits. Latency, whenever you have a latent asset or latent demand, it means that somebody will use technology to go exploit it. Think Airbnb, think Uber, right? Airbnb essentially exploits a latent asset of individuals to disrupt, say, the hospitality industry. Uber, as it went about the taxi business, it realizes that there's huge latent demand by varying price points, okay? And in all instances, people are interested because there's supernormal profits that someone can come in and take a share of. All right. So 2 weeks ago, I was in the US meeting with some startup. There are a lot of startups out there, for example, looking at the fees that brokers make in transaction and asking whether or not they can have a slice of that. And there are interesting stuff that tries to make the illiquid transaction of the real estate market space into liquid transaction. And the moment you can do that, it means that you target at the inefficiencies and make it efficient, and as a result, you make a cut of that supernormal profit that is being made at the moment. So I would argue that there is a lot of scope and we need to pay attention.
I noticed a few ears perked up when you mentioned the disintermediation of.
I'm sorry, I hope I'm not preaching to you, but it's just what I'm seeing out there as I interact with these technology companies.
Let's dive more into real estate and particularly the creation of value. Are there technologies out there that you see right now? You mentioned a couple of them just a moment ago that you think are most disruptive or most challenging for the real estate investment community, whether it's the sharing economy or autonomous vehicles or simply changing work styles, but which concern you the most with respect to the durability of real estate values?
Yep, personally, I don't think real estate value will be impacted at the end of the day because real estate values derive from the scarcity of usable land. And if you think about that unless you can
It's a very Singaporean response.
large amounts of land, or you can build a lot higher, right? Otherwise, real estate, the source of value is always going to be there. Now, I think what is going to be interesting for all of us seated in this room really is that in the business that we are there for a reason. We are making money through exploiting certain inefficiencies in the marketplace. Now, what is going to happen is that those inefficiencies are not going to be there forever because of the advent of a huge amount of data that is going on now, and secondly, because of machine learning. And it's going to get more and more efficient. And so I think we need to prepare ourselves for it and begin to think about the implication for our business model. You see this now happening in retail, you see this now happening in logistics. It's shaping the way logistics industry is playing out. It's shaping a lot of the.
And has that begun to drive your sort of sector by sector strategy?
Yes, it has. So, for example, in the real estate group, 3 or 4 years ago now, we concluded that online retail is going to cause consolidation of physical retail space. And we concluded that over time, the dominant retail spaces will probably win. The neighborhood convenience retail spaces will probably win. And those in between would probably be most in danger. Now, at that point in time when we devised the strategy, we weren't sure whether we were right or not. We investigated and then we kept testing that hypothesis. And I think it's some of these are beginning to play out. And I also think that that will affect all the other sector. The previous panel have talked a lot about office. Driverless cars will impact the way people think and work. Millennials who prefer to work in different spaces will have an impact on office space. So we all need to think about these implications.
And how does it play out in a market by market review? I mean, does technology have the potential to raise up some of the emerging markets, or maybe conversely to diminish the competitive advantage of some of the global gateways? Is there a leveling effect?
I think that technology will alter the balances. The critical thing to think about is that if one is heavily invested in, say, key gateway cities, does the unique value proposition of key gateway cities, will it go away over time? My personal view is that unlikely, and the reason is as follows. If you look at the evolution of where technology companies and the younger folks like to go to work, they all gravitate back towards the city eventually. Why? Because cities have the volume to generate the kind of work, live, play environment that the younger generation want. So I don't necessarily see it as the winners and the losers in this area as whether is it emerging market, but I think it's going to be a lot more nuanced than that.
Mm-hmm. The last panel talked a fair amount about adaptability or adaptation. Obviously, where you are investing in long-lived assets in the face of rapid changes in technology. Do you specifically identify adaptability or the ability to change as an investment criterion in your underwriting?
Yes, increasingly we do. And again, if you go back to this notion that real estate essentially derives its value from scarcity, then the scarcer that sort of asset is by virtue of either location or the quality of the asset, the more defensible it becomes in our view. And then if it's defensible, then you got to think about how you can adapt it over time, right? So we do look at that. It's tremendously important. It is something that we think about. It is hard to say exactly how you underwrite it. It's very specific in each case.
Yeah. You mentioned the emergence of machine learning and big data. What implications does that have for GIC as an organization in terms of your, things like your annual IT spend, or how you allocate your internal resources to manage big data sets and make them applicable and useful in an everyday sense with your investors?
Yep. In two ways. If you remember the framework that we talk about ODE, the excellence part, right? This question is really about the E or the excellence part. And I would say two things. One is that we are beginning to think about and implement systems that will help us perform the business of investing in asset management better and faster. And these systems can either be developed internally or outsourced, because these days there are a lot of people out there thinking about the same, trying to solve the same problem that we are solving. So I would say that investment has gone into that area. The second area, which is also equally critical, is to begin to think about the world of alternative data sets. Now, what do I mean by that? Previously, if all of us started thinking about how do you underwrite a real estate transaction, we will think about going to the likes of Jones Lang LaSalle or CBRE to get data on demand and supply. I noticed recently, for example, in our investment memo, that the sources that are quoted are no longer just limited to JLL or CBRE. There's an additional one which I've never heard of. So in this last round, when I visited the US, I visited with a company, and it's a young company of about 6 or 7 years old, or maybe less, right? And they have now become a pervasive source of data, simply by obtaining them through different ways, alternative ways. And yet there are other people out there in the business of figuring out whether the hospitality trade is doing well by trawling the web, hotel websites, and individually figuring out through technology what rates are being discounted when, in order to get a better fix of where the hotel hospitality industry is at. These are all alternate sources of data which we all have not previously thought about, but today is available, and there are companies out there trying to do that.
That's fascinating, and presumably will provide a way to mitigate the risk.
Yeah, I don't mean to scare JLL and CBRE. I'm sure I'm not saying anything that they do not already know.
Well, you know, we've been thinking a lot at ULI about the length of this cycle that we've been in, right? The durability of this market, and the lack of overbuilding that's occurring. And I have to think that this could be the payoff of the data revolution that we had over the past 20 years. I mean, there simply is much better information about supply and demand from, as you say, a wide range of sources now.
I actually think these sort of things are exciting, right? Because one way to think about it is that a lot of things are under threat, but the other way to think about it is that it opens up tremendous possibilities, ways of making real estate generate more revenue, ways of making our business perform even better that previously were unavailable. So that's how we are thinking about it in GIC, and certainly that's how I think everybody should be thinking about it.
So therefore, I put you in the Star Trek column, not the Mad Max column. Fundamentally, you sound optimistic about the impact of technology on our business. Great. All right. Greg, I think we are out of time. Is that correct? Okay. Well, I've enjoyed the conversation very much. Ladies and gentlemen, please join me in thanking Goh Kok Huat.
Thank you very much.